should be good. Whoops. Okay, I am an associate member of T3 Trading Group, which is an SEC registered broker-dealer and member of FINRA. All trades placed by me are placed through T3 Trading Group. You should carefully consider whether trading is suitable for you in light of your own financial condition. Position disclosure. Stopped at a Rite Aid today. Actually added to so I got less positions, but some of them I got heavier in. And some of them I lightened up in. And sometimes stocks go up and sometimes stocks go down. Who knew? All right. Let's jump into it. All good in the Robin Hood. All right, so right now SPYs are where they opened. We had a flat open for the SPYs, right? It was one of the things I said was tricky about today's session. Qs closed flat, so Qs came back a little bit. When we were doing our morning meeting, they were down 0.5%, and the IWM went up a little bit. When we were doing the morning meeting, the IWM was up 0.3%, and now it's up 0.6%, so a little bit of an uptick in the IWM throughout the day today, but the SPYs stayed the exact same. It is still a battle out here. It's a battle out here between the bulls and the bears. It's a battle out here between relative strength and relative weakness. Let's talk about it. So it was an interesting trading session, and honestly, here at the end of the day, we're not left with much new. You know, we said in yesterday's afternoon meeting, and so this is what made this morning's open a little bit tricky. We said in yesterday's afternoon meeting, if we get a really big gap up today, it's probably going to be shortable. If we get a really big gap down for today, then it's probably going to be buyable. Well, guess what? SPYs, like I just said, opened up exactly flat. Qs were down 0.5%, so there was a little bit of a gap down in the Qs, though I don't think it was enough to be an aggressive buyer there. We could talk about our Q levels in a second. And the IWM was gapping up. So really difficult to have conviction on opening trades with regards to the market itself. And our indices here are still going to be all in neutral territory, right? SPYs are in neutral territory. I think they would get bearish below 450. Qs are in neutral territory. I think they get bearish below like 370, 750. There's a support zone between 370, 750 and 380 in the Qs. That's our key downside level right now. Interesting to see this 200-day slowly starting to catch up to price action, right? That 200-day has been far and away for quite some time. And the IWM still neutral as well. You know, the IWM was finally bordering on becoming bullish again, and then had that failure of the pattern yesterday when the Fed meeting came out. So it was a difficult open this morning. It was hard to have a lot of conviction on either side. And I think at the close of today's trading session, we're still left with a little bit of a mixed message from the market, and a market that is broadly bullish. I know Pat, into the close, took a little survey in the VTF on people who thought if the market was bullish or bearish. I take issue with Pat's survey. So I think Pat said that it turned out to be 75% of our traders here in the group said bearish. I actually clicked bearish myself, but what I would have clicked if I had the option was neutral. But Pat didn't give the neutral option. Neutral is boring, isn't it? We always want bullish, we want bearish. Neutral is boring. So between those two, I ticked bearish over bullish just because of yesterday's candle and the price action today. You know, definitely you can't characterize today's price action for our indices as bullish. But there are certain things under the surface that I think are kind of worth noting. What do we have under the surface that's worth noting? First of all, we still have really good strength in XLE. I wish this XLE would take a chill pill so we could have an entry. Some of these stocks, I know Oxy got mentioned in the afternoon here before the market closed. Oxy's still giving a potential good setup now. 2 inside days in a row, letting this ADMA catch up. So we could be looking at Oxy tomorrow. But XLE is still showing really good strength. If anything, though, XLE is still too extended. XLF, however, we talked pre-market this morning about how maybe you could start to build in on the XLF versus the low from 2 trading sessions ago, which is 39.97, or build into, you know, some of the other banks. I particularly like Bank of America, JP Morgan, and Morgan Stanley. Those are my favorite. But Bank of America is a little bit extended. JP Morgan, it was less extended, so I liked that versus yesterday's low. That low actually held by just a little bit today. If anybody built in, ADMA is not quite caught up yet. And Morgan Stanley actually broke that low and snapped back. That's interesting to see. So you probably would have gotten stopped out of that Morgan Stanley if you tried to build into it. So we got pockets of strength that are out there for sure. And if you look at the NASDAQ, which has been weak, well, the NASDAQ held its support. Again, going back to the morning meeting, we spoke about how a big gap down would be nice because we could come in and we could buy it. What I wanted would be a gap down across the board and the Qs gapping down into our big support zone. If the Qs could have opened up between or into this like 378 to 380 support zone, I think that would have been a really good opening buying opportunity for the NASDAQ. And the NASDAQ was almost at 380 pre-market, not quite. And then by the time the market was opening, though, by the time we were doing our morning meeting, it was several dollars away. So the NASDAQ was gapping down, but that's because it's relatively weak and wasn't gapping up down enough, I felt, to come into our support zone. But look at where we held today. The low of the day is 380.13, and we actually did a fantastic job calling out some lows today in some stocks and in the market, which I will also talk about in a second, so don't let me forget about it. I just want to still talk about some broader stuff here. So we got our pockets of strength, right? Value, financials, energy. We got this NASDAQ that still managed to hold support today. It's not totally broken. And the interesting thing on growth, which has been obviously the worst space to be in, the Kathy haters. You had the people who were saying Kathy is a god when, you know, Arcure was at $150, and now they're saying that, you know, they're comparing her to whatever that woman's name is who just got caught for fraud. Holmes. So it's really important to pay attention to the sentiment levels, though. When people get too excited. So let me take a step back. Most of the time, the smartest thing to do in the market is to do what everybody else is doing, right? Everyone loves to be a contrarian, but most of the time, what do I mean by that? If the market is trending higher or a sector is trending higher, like energy or something like that, you don't want to be a contrarian in XLE right now. You don't want to be a contrarian in XLF right now. You don't want to be, someone was asking me about shorting ExxonMobil pre-market this morning. You don't want to be a contrarian in ExxonMobil right now. These stocks are just too strong. And as excited as Stefan has been, we are not seeing yet broad enthusiasm and excitement in energy, despite what these last 4 days have done. I would love for these stocks to set up a little bit better, but they haven't. Most of the time, you're better off just doing what everybody else is doing. That's what actually creates a trend. The time when you do want to become a contrarian, and being a contrarian, it sounds really fancy, it sounds great, it's really hard to do. If you're a contrarian, it's almost like you're trying to pick tops and bottoms. When you actually want to start becoming a contrarian is when everybody is just super, super, super excited, right? Everyone was thinking Kathy was a god when her ETF was at $140, $150, $160, right? That would have been a great time. The memes were coming out nonstop. You know, I remember seeing the, I don't even know if it's appropriate for me to say it, but I remember seeing like the memes on like Instagram on Wall Street Bets and stuff about like they would take like a model, for lack of a better term, like a beautiful person, beautiful woman, and then they would have like the picture of Kathy right next to it, and it's like, you know, which one would you want your girlfriend to be? And of course, you know, everyone wants, you know, Kathy to kind of be your girlfriend. Those were the memes that were coming out then. Now the memes that are coming out now are she's a fraudster, you know. So we got to pay attention to these sentiment type things when they become extreme. So it was interesting to see. I was talking to Diego on the phone yesterday about these growth names that have been getting destroyed. And the one thing that I mentioned was, even though we've seen some solid fits and starts in them, like that day, the Thursday before New Year's was one day in particular, and this day here on December 17th was one day in particular where they looked really good, and maybe there was like a Santa Claus January effect that was coming in, and they were really strong. The one thing that we never saw, though, at any point in any of these stocks, and maybe DKNG is not the best example for today because it had news, the one thing that we've not yet seen on any of these names that have been selling off was a real capitulatory event. That, like, violence that kind of comes in a capitulatory event where the volume just goes through the roof and the stock gets super extended on multiple time frames. That is oftentimes the hallmark of like a real low that's coming in for a stock or for a sector. That was the one thing that we hadn't seen at all. And we did see some aspects of that actually today on the intraday chart. You can look at it, and we kind of called these out really well. DKNG, I guess, was one. The volume picked up here a little bit, but you do at least see the extension here. The volume, honestly, in this probably wasn't big enough. DKNG also had some good news, but you look at like the volume increase into the low in SoFi as an example of like a real potential capitulatory action that was coming in. And then you look at the daily candle today on SoFi, 4 days down given this higher volume hammer that's coming in. Look at Robinhood. Robinhood, first of all, oh my God, I just want to like throw up in my mouth when I look at this chart. I mean, holy heck, just terrible, absolutely terrible. But now third day, look at the volume in this Robinhood today. It's the biggest volume it's had basically since the IPO and this crazy bubble day that it had back here. I'm sure there's somebody out there who's still long this thing for $80. That's interesting, right? Look at the intraday chart down here, and this is when I think it got like a Josh Brown call out on CNBC. But the volume is really picking up. It was extended on every time frame. That sell-off was violent, and finally that kind of bounce came in. You can even see it in some of these other companies that I don't like as much, like in AMC. AMC here with a potential double bottom. It's like the 6th day down in a row. Look at the volume here at lows or at about lows. That is, again, what capitulation looks like. GameStop. I called this bottom out in GameStop. Again, another company. I think GameStop belongs at $40, but the technicals are smarter than I am. And this thing put in a real capitulatory candle here at lows. Hammer, high volume, daily extension. That's the stuff that we're looking for. That actually can sometimes create real tight bottoms. So, and honestly, even though we had some shorts in the electric car names, which I also think don't belong at these prices personally, but again, the market's smarter than me. Look at the daily candle on Rivian today. This was another one that, as much as I struggle with this company at these prices, considering that they've like not even sold a single car. Look at the capitulatory action in the price action here, and this was another one we called out. Maximal volume, very hard to take this trade, by the way, just because of its expense. It would have been a lot of risk, but maximal volume with a hammer coming in. Look, just scrolling out on my 5-minute chart over a week here. There's nothing that comes anywhere, even remotely close volume-wise to what was going on here, followed by this inside 5 and up. Interesting to see that. So, if we go back to the big picture here of the market, I do think that the market is giving us a mixed message. And that's why we do the bullish, bearish, neutral exercise, because I do think that the technicals of the market here are broadly neutral. But when you look at the kind of underpinnings of it, the thing that scares me most is still big tech. The potential that we just see a lower high come in the Qs here, and we see, Apple closed on lows. We see continued sell-off in Apple coming in, maybe Microsoft coming in. As much as Microsoft did give a bounce today, it still closed below a support level, closed below 315. And obviously, we know the market capitalization of these companies just has such a big effect on the SPYs and the Qs. So that's kind of the one thing that does worry me, is maybe we're just setting ourselves up for a little bit of a dead cat bounce and then a real break of support in some of this stuff. But some of the other things I'm seeing are exciting. This XLE looks fantastic. I just wish it would give us a setup. XLF looks great, maybe is giving us a setup. And, we did actually see some capitulatory action from some of the growth names. The things that look the absolute worst to me right now are honestly these FANG type stocks, but it's very difficult to bet on the downside in the FANG type stocks, right? That has been a widowmaker of a trade for just years and years and years and years. So I don't really want to come in and do some serious shorting of Apple or Microsoft. I just will kind of stand in the crowd and cheer along and watch as a fan if those do break down further. So we'll see how all that plays out. Again, at the end of the day here, a neutral day. It doesn't really give us too much more information in a market that is also overall neutral. As far as trading goes today, though, I really got to think that we were super on point. We were on point with a lot of different stuff. We were on point on both sides of the market. I know that, and it's crazy how this LCID still closed above this 36 and closed so well. But the short through 36, basically at the open on LCID versus the opening high. What a fantastic trade! And on top of that, I was telling everybody in the VTF to book profit when it was below 34. So people listened to me. I know at least one or two of you was like, okay, I'm out, or I just booked some profit. I don't think if I was short, I would have gotten out entirely, but I could just read this capitulation that was coming in here that the stock was due for a bounce, and that's why I was kind of advocating traders to take some profit. At the same time as that was going on, we called the bottom in the market also pretty much perfectly. The Q's into 380, the SPYs the low of the day. I know Felipe announced I'm buying SPYs, and he said that at I feel like he said that at 365.70. Just fantastic execution on some of that. Then we had some other stuff like, we got Stefan getting in SoFi. Maybe he sees value. I don't know what's going on here, but calling out the trade above 13. Same thing with the capitulatory volume that was kind of coming in a little bit late. But then you had this NVIDIA also at this low with its hammer, right with the Qs coming into its support zone and this giving a higher volume hammer and then kind of bouncing up off of that. Yeah, I just think that the execution overall was great, and I think even some of you guys caught this insanity and this DWAC into the close when Pat got the news into the VTF for this level of continuation. I think that this DWAC was a good trade if you were able to grab it today. I'm probably going to advocate that people do not trade it tomorrow. The thing can be really, really dangerous sometimes. So kind of a crazy day today, and we're still getting a mixed message from the market, but I got to say, overall as a team, I don't think that we could have navigated it any better. We were just super, super on point with the call-outs, the communication, the timing, the execution, shorts, longs. Loved it. And look, I know at the same time as I give us all a big high five and a shout out, I know at the same time that some of you guys who are newer are still struggling a little bit. And it's okay. This degree of volatility and this degree of movement that we're dealing with right now, if you're just starting your trading career, it is hard. These movements are big. The risk that you have to put on is big. The price action is very fast. If you're an experienced trader, you should be loving this type of volatility that's coming in right now and these movements and these setups. But if you're someone who's newer and you're still trying to learn the ropes, it's definitely trickier. So for everyone, always risk management is the key. Experienced traders and new traders, risk management is the key. But particularly, if you're a new trader, you're going through your learning process. This isn't necessarily easy when it's fast and whippy because you're slow. And the reason why you're slow is because you're new. And again, that's part of the process. So don't let that get you down. Just got to focus on doing the right things consistently over time and always managing the risk. It's okay to be wrong. It's okay to mess up execution. I made an execution error today that I was whining about at 10:30 this morning because it cost me $250. I just I put the wrong tier size in on an offer in Bed Bath & Beyond, which I didn't even talk about Bed Bath & Beyond. Bed Bath & Beyond was by far my best name today. We kind of crushed that one off that earnings report. But you really, I think, had to take the trade pre-market. Trading it after the market opened was really difficult. The trade was back through 1350. Pre-market on the way up was the trade I called out, and if you're able to get that, it was a really great trade. The intraday price action was a lot more difficult, but off of that, it kind of made my day. It was by far my best name on the day today. I don't like how this Bed Bath & Beyond closed, though. I really would have liked a better close, closer to that, $15.50 to $16 that we spoke about, or maybe there was like a little hammer type candle that kind of came in and closed a little bit weaker than I would have liked, but I still like the name. I'm still keeping it on my radar. It's been a fantastic trading vehicle for me. And so I got stopped out of my Rite Aid today, which I was disappointed about. Trailing stop to this low here. I caught this as a buy pre-market when we were talking about it as a team that day at $11.57 on this day. And I took the offer. I remember there was an offer there. There was like a buyer at $11.50 or something, and then there was like a... Oh, man, how much was that offer for? I feel like the offer... I remember I didn't get all my size. There was an offer at $11.57. I was like, I'll take that guy. And I didn't get everything that I tried to buy there. But that worked out really well. Even giving it back $2 or whatever I gave it back, still a great trade. Unfortunate not to get the continuation though, because I thought that this daily chart was looking good. And Rite Aid here is trying to go again. Okay, champ, show me what you got. All right. That's really all I got. That's my thoughts. So, happy to take a look at what you guys are looking at, or whatever questions you guys got. So, scrolling up in the VTF here till about 10 after 4. Thank you, Mike, for posting the YouTube link. First thing I'm seeing here is from Steve. May have missed you earlier today here in the VTF, but interested in what got you bullish on Rite Aid today. I was already in Rite Aid. I didn't add to Rite Aid, though I did think that the daily chart looked great. This was a swing trade that I've been in from pre-market on December 21st. I thought that this daily chart looked really good until kind of these last couple of days. Broadly, this daily chart looked really good. Tried to go here on January 3rd, which was the first trading day of January. We really wanted to see continuation through this 15. It couldn't do it, which wasn't the end of the world because it was still a little bit extended, especially for this type of stock. Next candle wasn't great, but then yesterday it tried again and failed. So this was not a good-looking candle yesterday, and then that led to a failure. And what did Walgreens do? It may have something to do with the fact that, Walgreens sold off pretty hard on its earnings report today. But overall, this Walgreens has been trading much better than Rite Aid has since early December. Rite Aid has not played along in the same way. But yeah, since its earnings report has done well. But that was it. From Christian. This morning at the opening, I wanted to take Lucid trade with you through 36, but then I saw it was 68 cents risk and I passed. That's just fine. I'm a beginner and I have a smaller account, and I would not have been able to sell more than 2 lots, and I also made a rule for myself not to take space risk that is bigger than 1% of the price of the stock. Is my thought process sound? Yes. It's a great thought process. You are risk management focused. You are game plan focused. I love it. There is nothing wrong with not taking trades. Did I say that right? Yeah, there's nothing wrong with not taking a trade. There's nothing wrong with not taking a trade. As a matter of fact, if a trade does not fit your rules and your risk parameters, you should not take it. The only thing I would say on the other side of it is I like that rule that you have there a lot. You just got to recognize, like broadly, not necessarily for you, you got to recognize the type of stock that this is and what losing this level could do. I think we said really early on, like as it was breaking 36, that if this thing really breaks down through this 36, it could easily see $33 today as a first stop. And then next thing you know, it could be in the 20s. I think Josh was saying 27. I think that that's honestly fair too. And look how fast and how violent that move was. So I know that this risk seems like a lot, but with the type of stock that this is, it has the ability to go down as fast as it went up, like just moving points and points and points and points at a time. I think that the trade was very valid. But for you individually, for you personally, if this was not the right trade for you from just because of your risk rules, I love it. I love it. As a matter of fact, if this was the best trade of your career and because you were involved in it when you shouldn't have been, that would be a bad job. So good stuff there. Where's the 100K Bitcoin that you called by the end of the year? I forgot about that one. Next from Robert. I think the word you're trying to say is capitulation, that you're not typing well. He says, sorry for the dumb question. What does capitulation mean? I don't even know how to type the word. What does capitulation mean? According to Google, the definition of capitulation is the action of surrendering or ceasing to resist an opponent or demand. That's our actual definition. It means surrender. But then you can see here, look at this, right? Look what Google gives you here. Capitulation is agreement in a time of war for the surrender to a hostile armed force of a particular body of troops. Blah, 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 blah. But look at the pictures. It's like one war picture and then it's charts. I love it. So the word capitulation, I guess that's what it means, right? It means to surrender. But what it means for us as far as stock trading goes, and I think that this Rivian is actually just a great example of it, is a capitulatory bottom is like my favorite bottom in the market. And you can have this as a top also, but we see it a lot more as a bottom. It is when you've got something that has just been getting so beat up, right? So beat up that sentiment starts becoming so bad that eventually people just say, I don't care anymore. Get me out of this. I don't care the price. This thing is so terrible. I'm going to go bankrupt. I'm losing Junior's college fund, etc., etc. Oh, contrarian. All right. We gotta do a different. Well, you know what? I'm just gonna finish my thought on capitulation in case people don't know what this means, and then I'll go to that one. So that's what capitulation actually means, right? It's when this volume increase is really happening. People throw in the towel. It's like literally a giving of stock away from the weak-handed holders to the smart money that's out there. Robert's other question, I don't think Robert's first language is English, is what does the word contrarian mean? So let's have fun with Google again. What does contrarian mean? If I can type it myself. Contrarian. A person who opposes or rejects popular opinion, especially in stock exchange dealing. Opposing or rejecting popular opinion, going against current practice. Yeah, so interesting here that in the literal actual definition it says especially in stock exchange dealing. Yeah, so a contrarian is a person who thinks the opposite. So I'll give you an example of a smart contrarian. I'll give you an example of a dumb contrarian. You got these naysayers on the market for the last 10 years, and they love to be on CNBC, they love to be in financial media, who for 10 years have been saying, oh, the market can't go up because fill in the blank on their reason. So a contrarian investor would be everyone likes something long, so you're going to go short. Or everyone likes something, everyone thinks a company is terrible or a market is terrible, so you're going to come in and buy it. So it basically means that like you're literally doing the opposite. So we've had these naysayers this entire way up. You don't want to be a contrarian in this market almost ever over the course of these last 10 plus years. You just would be getting your face ripped off, right? Where it makes sense to become a contrarian, and this actually falls in line with capitulation, is in periods of market extremes. When everybody and their mother loves something, when everybody and their mother hates something, that's when it's best to actually be a contrarian. Most of the time, like I said earlier, you're better off just kind of going with the trend. Like there's a lot of these old adages that maybe don't apply in the same way anymore, that go back to like the Jesse Livermore days, about how like, you know, if you reach a point in the stock market where your shoe shine guy is giving you stock tips. Or I remember in the late 90s, in like 1999, 2000, like walking into the dojo and like the karate master is like, not talking more about stocks than they are talking about martial arts. Like that's when you want to start considering going on the other side, right? So, and that's why I like paying attention to, honestly, like Wall Street bets, and paying attention to how they're feeling when they start, you know, needing to be put on like suicide watch in Wall Street bets. Well, you know, maybe that's the time when you can be coming in on the other side of the trade. So hope that helps. Hope that thought process helps. Next here from Jerry. Should we consider extension from equilibrium, and if a name trades with momentum on our probability factor? Yeah. So extension from equilibrium is another thing that we can put on the probability list, but the reason why I don't have it in the probability class is because I feel like it's a one-off, which maybe it's not. Maybe it's not a one-off because it is potentially present in every trade. You know, it's something that you want to pay attention to. Like, so if you are buying, you know, as much as we might be bullish on the XLE, if you're buying XLE right now because it's extended, it doesn't mean that it can't go up and you can't get paid. It just means you have a worse risk reward and lower probability of success. Same thing with shorting a stock that's already down a ton. But as of course we know our extension rules, a stock that is up too much can always go up even more. A stock that's down too much can always go down even more, right? And basically an extended stock can always become more extended. But yeah, you know, extension has a huge effect on probability. So yeah. I was thinking, and you're saying you're thinking that today on Schwab. And yeah, that was my one issue when we brought up Schwab in the morning meeting. Was I like this as a 1, 2, 3 type trade, or if we're calling it that now, where you get this first big day. I don't remember who first said that term in the VTF the other day, but I like it. For like when you get the big momentum day followed by an inside bar rest day followed by continuation as like a 1, 2, 3. So I like that trade. You just got to recognize it's a pure momentum trade. You are only making money in this trade in Schwab if enough momentum can come in that can give you that continuation. Which and there, you have every reason to believe in that momentum, though, right? You have every reason to think that that can happen because of the setup itself. But you also have to recognize that because of the extension, you are purely relying on momentum to pay you. I don't love doing that. I don't love, I think as everyone knows, having my stop loss be above the 80 MA on the time frame that I'm trading. Because I trade to be right and be wrong, and part of trading is also knowing yourself. I know myself really well to know that if I get stopped out of a position, but the market hasn't proven to me that my idea was wrong, I tend to start doing stupid things. That's when I tend to start fighting stock. I'll look at it and I'll go, oh yeah, they just shook me out. Look, I think my idea is still intact, and then I rebuy it and then get stopped out again and rebuy and get stopped out again. I know that I do that. So I know for me personally, in these pure momentum trades where I'm having a stop loss that is above the 80 MA, I got to be a little bit careful, because if you're getting stopped out of Schwab today and you took it as a momentum trade, Schwab could still be at $100 in a relatively short period of time and give continuation, and your idea could be right, and you just got shaken out because it was too extended when you bought it. So you're relying purely on momentum to pay you. And then, you know, you also want to look for your small time frame confirmation that that momentum is coming in. I don't really see that here. first bar of the day is normal, and then volume dies off. This is not what momentum looks like from a volume perspective. From Adrian, speaking of contrary thinking, The Art of Contrary Thinking by Humphrey B. Neal is a great book that he highly recommends. I have not read that one. From Stefan here, it's hard to be a contrarian in the stock market. No one had cared about valuation and cash flow for so long. Yeah, and look, guys, this is why technical analysis is so important, I think. Because you can have a thesis. You could have had a thesis in energy, and maybe you did, for like years, as it was bleeding out, that it's a buy, and if you got involved in that too early, you're enduring massive amounts of pain, or you wait for when that technical signal really comes in to be able to start executing your trades. I am a big believer in having a fundamental thesis for a stock or a market, but you want your technicals to confirm that the thesis is right. Because if you're a year too early, as far as I'm concerned, it's the same as being wrong. Diego saying GRWG. Yeah, I don't know. Did this give capitulation today, though? Yeah, a little bit on the small time frame. It didn't close great. I would like a better daily candle on higher volume in this GRWG today. Wow, this is another one. Holy cow. 67. Never belonged up here to begin with. Down to 11. But stock had just, started at 7. So we'll see. Ugly lows will be on an ugly day in the market where for no reason these names rally and are green soon, I think, at least for a swing long. Yeah, or at least a percentage retracement. From Steve, hi Derrick, volume question. Looking at the massive red volume. I don't look at volume in terms of red or green. Looking at the massive red volume in Rivian and the capitulatory sell-off, it looks like it rebounded on barely a fraction of the red volume. Can you give detail on that? Yeah, no, that's fine. Volume should maximize at or near the bottom. Sometimes it's the candle before the actual bottom. And volume is confirmation. So red volume, green volume, I don't look at it like that. I just look at what's the relative volume compared to what it typically does based on what the candle is doing. So volume is just, this is like literally definition of capitulation. Volume is increasing. Stock is getting extended and more extended. Volume maximizes in this case. This is like a perfect example of it, by the way. Sometimes you'll see the volume actually maximize the candle before the low. This one, it actually maximizes at the low. Gives you a perfect hammer here. And then your next candle, to make it even sweeter, is an inside and up. I love the inside and up when this comes in after a capitulatory hammer. This is like, if you guys have ever looked at my candlestick class that I do where I go over this is like how I would draw, if I was teaching capitulation, this is literally how I would draw this on a whiteboard. Like this is like an amazing example of what capitulation looks like, at least on a 5-minute chart here. And then, and volume should begin to decrease again on the way up because volume maximized here, and then eventually will normalize as the stock is in equilibrium, and then the real question becomes if the stock reverses or not, which this reverses. They don't have to reverse. All this candle means, even though it's on this huge volume and everything else I'm excited about, all this candle means is price correction back to equilibrium. That's all it means. It means that you have a greater than 50% chance of getting a snapback to at least the ADMA. So when you take this long, your target number 1 is the ADMA, your target number 2 is the 21 EMA. And it is a counter trend trade. So you probably want to be selling 70 to 80% of your stock by the time the 21 EMA is tagged, right? And then keeping, 20% of your position, maybe let's say between 10 and 25% of your position, depending on other factors, you actually would want to keep to see if this retracement can become a reversal. How does a retracement become a reversal? I want everyone to look at this chart of Rivian right now, I want everyone to identify a candle on here in this area. And I want everyone to put that candle in their brain. The question I have for you is, in which candle is a reversal confirmed? And I'm actually just going to give like a moment of silence here so everyone can think about it. I want everyone to kind of come up with an answer. We'll do this as a teaching exercise here. In which candle in Rivian here, because it's like a perfect chart just about, almost perfect. There's one little thing I would change about this chart to really make it perfect. Where, on which specific 5-minute candle here, 10:25 candle, 10:30 candle, 10:35 candle, 10:40, 10:45, 10:50, 10:55, etc. In which candle does a reversal occur? And finally, the answer is the 10:50 candle. Okay? What is the definition of trend? An uptrend is a pattern of higher highs and higher lows. A downtrend is a pattern of lower highs and lower lows. So for a reversal to be completed, you have to go from a pattern of lower highs and lower lows to a pattern of higher highs and higher lows. So you could almost even make the argument that there was never a downtrend to begin with, because at least intraday here, this was not a trend. It was just straight down. But if you include yesterday's price action as well, there was a clear downtrend. That downtrend gets some momentum in it. And that's actually usually what ends up happening, is your downtrend gets momentum in it. And that's what leads to a capitulatory bottom or a capitulatory retracement. So then you have a low. This is just potentially another lower low. And then here's a high, right? It's just potentially another lower high. And then there's a low. Okay, that's interesting. It's notable. This low is higher than this low, but this is not yet a reversal. You've got a low, a high, and a higher low. What's the definition of an uptrend? Higher highs and higher lows, right? I got a low, I got a high, I got a higher low. It is only when this candle's high breaks, when the high of the 10:30 candle here breaks, which is 82.37. The high of the 10:30 candle pivot high, which could just be another lower high, is 82.37. So you only actually have a confirmed reversal of the trend on this time frame when the stock is able to tick 82.38. Where does the stock tick 82.38? On your 1050 bar. Okay? So it's just a little educational kind of review here. Because all you can expect with this candle is a retracement into this area. If a retracement is going to become a reversal, it needs to first create a higher low, and then that high has to break. Usually, and this is the only thing that's not perfect about this chart, usually when the retracement becomes a reversal, the initial bounce here was actually a little bit more closer to the 21 EMA, and you get like a little bit of a consolidation in between the moving averages, where it's ticking above the 21, it's ticking below the 8, and then eventually it breaks up, and you have your higher high and higher low. So thank you for the question, Steve. Great review we were able to have off of that one, of technicals. From DJ here, you mentioned in one of your videos that support resistance on the intraday chart is sometimes important, but not nearly as important as the daily. Can you discuss the instances when intraday support and resistance is significant? Yeah, so I honestly, for the most part, don't really care about intraday support and resistance. You use it for execution. So is it sometimes important? Yeah, it can be important just from an execution perspective. That's it. I don't really care very much at all about small time frame support or resistance. It's the daily charts. The daily chart support and resistance levels are formed by institutional money. I personally am not big enough of a trader to make a resistance level for a stock on a daily chart. Can't happen. I may be big enough to actually create some short-term 5-minute level support and resistance on a stock if I was doing a lot of selling or a lot of buying consistently at the same price. As much as I like to think I'm fancy, you don't want to be leaning off of me in the market, right? We want to be making our decisions based off of the big boys and big girls that are out there. From from DJ. Also, do you think the 4-hour chart is valid to assess support and resistance, or is it pointless? I don't use a 4-hour. I'm not necessarily against it. I kind of go from an hourly to a daily. But yeah, you could look at the 4-hour. I don't see why not, to pay attention to some bigger levels. Most of the time, if you can see it in a 4-hour, though, you could see it between a 15 hourly and daily. So it's not one that I go to. I don't even have it built in for my charts. But I would not be against you using it if it helps you. All right. Is GameStop up after out? All right. Look at GameStop, man. Did they shake all the apes out today and then announce something new? Talk of launching a dedicated business unit on NFT and crypto. Wow. What a world. What a world. Paul, speed will come with time. Speed will come with time. And none of you will ever be as fast as me. I'm like, you can ask like Pat. I can get orders so fast into my system with my hotkeys. It's insane. I can get multiple limit orders and out in multiple places per second if I'm really going for it. That's because I started trading in an era of trading. Is BBBY going on that too? Nice. I started trading in an era of trading when speed is what really paid you. You know, I did all day trading, a lot of micro scalping type trades, and it was all about how fast you could be on the keys. I mean, even while I'm talking to you here, I just put 3 limit orders out in 6 seconds, and I'm in no rush to get those limit orders out. So speed comes with time, getting comfortable with your keys, and you know, when you're using hotkeys for the first time, you're gonna end up pressing the wrong button sometimes too. It's just part of the process. I still do that once in a while. It's super frustrating. Felipe doesn't speak English either. Don't worry. I called it. No, it was definitely someone else on the team here who described a setup recently as a 1-2-3 with the big Maribozu followed by inside rest and then looking for momentum continuation recently. I like that, so I stole it. I'm sticking with it. Peloton. Peloton is another one on a small time frame. Yeah, we're volume maximized on the candle before. I would still like this Peloton to be even bigger. Like the Rivian is so perfect because it's like when it's really right, the volume just massively outweighs even like that opening and closing candle, which usually have the higher volume levels to it. But yeah, these prices in Peloton still kind of blow my mind. I got stopped out of it the other day, but I want to have a position in this Peloton. All right, next here from Justin. I traded AMD today, and the reason was that the 10:05 candle, I assume we're talking about a 5-minute, at the time of the hammer, was the biggest volume of the day. Okay. There's no hammer at 10:05 though. There's a hammer at 10:10. So this is a great example of kind of capitulation not happening perfectly at that low. It's actually interesting that it's on the high of on the bar on the way up. You almost never see that. Usually it's either the bar at the low or the previous bar. Anyway, 10:05 candle was a hammer on the biggest volume of the day. I bought versus the low of the candle, but then ultimately got stopped out only for the next candle. Yeah, so that's the problem. So you got to be careful, right? Because let me go back to Rivian. Because if you guys remember, I was saying even when Rivian was breaking 80 that maybe you could start looking for a long. And if you bought 80, that did not work out, right? But it was just because I was seeing the volume capitulate. But what I was saying to you guys was buy it on the way up. Don't buy it on the way down. So it's like if it breaks 80 and then snaps right back up with the way the volume is coming in, then you're buying it on the way up. That's a trade that makes sense. And a lot of the times, so we talk about anticipating trades. If you want to talk about anticipating a trade, this candle maybe becomes the hammer if you're seeing that volume really pick up and you buy it on the way back up, through 80 versus like a low of 79, 70 or whatever that gets put in. That's not what happened. It broke 80 and then just the stepping shorties were coming in and they were just piling it down and piling it down and piling it down and just like it was just full on destruction. So you got to make sure that you're not catching a falling knife, because yeah, maybe it looks like the volume is picking up here. This is not a hammer candlestick, by the way. The tail is not big enough. The volume looks like it's picking up, but next thing you know, the next candle has even bigger volume and it's even more red, right? Again, that's exactly what happened in Rivian. Like this candle, look at this. This candle was the 1, 2, 3. This candle right here, fourth candle down, volume is getting really big. You can't see these next two candles yet. This volume is huge compared to anything else it's ever done. And then guess what happens? Next bar, even bigger, even worse, even more extended, even more volume. And then guess what? Next candle, even bigger, even more volume. And then bam, that's one where the hammer actually comes in and you can actually take the trade. So for AMD, you're seeing the volume coming in. You're going, oh man, and the volume's getting really big here. I want to start looking for a chance to buy on the way up. Maybe... we try to anticipate sometimes and be a little bit sneaky. Maybe you're looking at this through 133 and try to buy it back on the way up through 133. I don't hate that at all, but then you get stopped out and you were too early. That's a problem sometimes with these trades if you're kind of cheating a little bit, which I will do. Because the upside on cheating a little bit and not waiting for the candle to fully close, if you take that trade back, let's say that this one ended up closing as a hammer. If you cheated and you bought through 133 versus the lows versus waiting for the hammer to actually close, you might be buying 133.50 and having a significantly worse risk reward, but you have the confirmation of the candle, right? So you just got to be a little bit careful. Here's when you actually have the confirmation of the candle. Or on Rivian, that's where you actually have the confirmation of the candle. So you can't be buying this stuff on the way down. You got to be buying it on the way up. How are you buying it on the way up? You can buy it on the way up if you see it break a level and trade back through and go long versus that level. That's not even a chart trade. It's really more of a tape trade. Or you can actually have that hammer that kind of comes in and that becomes then your execution there. I'm just reading the final part of your question. And yeah, so sometimes I will get stopped out more than once on this. So I would consider trying this again off this low, provided that it falls within your rules. From Steven, first green candle with the bottom wick. I'm not sure what chart you were talking about though. Now I got a bunch of people saying 1050. I don't know. Oh, that was when we did our reversal game, right? Was it 1050? Yes, you guys are correct. Awesome. Rich N saying the 1, 2, 3 continuation buy from Sammy Abusad. Am I stealing stuff from Sammy accidentally? I don't mind. I like Sammy. Next from Dave, can you repeat what you said yesterday about pro traders using a minimum of 400 shares? Yeah, sure. So it's a game planning thing, right? So if you're a professional trader, you can't trade odd lots. So you have to trade things that are divisible by 100. The problem with having to do that is that, let's say that you buy 100 shares of a stock. I call that the curse of 100 shares. You can't do anything with it. You can't do any game planning, right? If you have 100 shares, you can't even cover your risk. So let's say you have 100 shares, I have 1,000 shares. Stock starts to work out a little bit. I sell 500 shares, I cover my risk, and then the trade fails. On break even, you took a loss. So you're at a disadvantage from a game planning perspective because you don't have enough stock, and that causes you to take a loss. Let's do another example. Let's say that you have 200 shares and I have 1,000 shares. And at least with your 200 shares, you could sell 100 shares to cover your risk at the same time as I sell my 500 shares to cover my risk. But now you have the curse of 100 shares. Now what do? Gives you a bigger move. Do you sell it? Do you hold it? Do you trail it? What time frame do you trail it on? So it's better than only 100 shares, but it's still not great. With 400 shares, at least you're finally starting to give yourself a little bit of game planning flexibility. With 400 shares, you have 400 shares, I have 1,000 shares, you sell 200 shares to cover your risk. Now you got 200 shares. You got some flexibility. You could sell one at a risk-reward ratio. You could sell one at a resistance level. You could sell one based on a 5-minute trail. You could sell one based on a 15-minute trail. You get more flexibility. Unfortunately, and I'm honest about this, the bigger you are as a trader, the bigger your account size is, the more tier size you can take. Everything else held equal, trading is easier. You know, and again, it doesn't mean that you can't be successful as a new trader with a small account. You can, but I will be honest, it is harder. It is easier. You know, if I've got 10,000 shares in stock and you've got 400 shares in the stock, I have so much more game planning flexibility. Because think about all of the times that trades, where that game planning flexibility pays you by having more tier size, is in the case in which a trade works a little bit and then fails. And that happens a lot, right? How often does it happen where you take your trade, you executed it well, you get a move, it goes 2-3 times, maybe even 4 times your risk, but then eventually comes down and fails, and you give some stock all the way back. Again, the more stock that you have, the more flexibility you have to trail on multiple time frames, sell some at increments, or whatever it is. So I have always been an advocate that you should try to have a minimum of 400 shares in every trade that you take, so that you can have that game planning flexibility for when your trades work a little bit. It will benefit you. Jerry's saying, would you take that trade? Again, not sure which trade you are referring to. Next from DJ. Given how chaotic the open can be, are you more careful assessing relative strength in the morning? So I love to trade more than anything else right at the open. You know, relative strength starts pre-market. Sometimes it flips the second the market opens. So you can only be trading based on the information that you have. And in some ways, you might be at a disadvantage in terms of understanding the full degree of information at 9:32 in the morning. But the flip side and the potential benefit is taking advantage of the lack of liquidity, taking advantage of the momentum, taking advantage of the price discovery that's occurring at the open. So, and I've mentioned this in the past as well. In reviewing the statistics of traders, what I have seen is that experienced advanced traders, their most profitable time of the day tends to be the first half hour of the day, but new traders tend to, like entry level traders, actually tend to not do well in the first 30 minutes of the day. They often are losing money in the first 30 minutes of the day, and their best time is usually post 10 a.m. It's usually the 10 to 11 a.m. period. But at some point you got to make the transition from being a new trader to being an advanced trader, right? Or a little bit more experienced. So you definitely want to learn to trade the open. I know my absolute best trades are almost always happening it's usually in the first 10 minutes, first 5 minutes. Steve going back to Rivian. I thought we covered this already. Looks like the 955 candle has the highest volume. Well, has the highest volume up until that point. And it gets bigger and bigger. Has the highest volume, however, doesn't seem to be the biggest down movement. Is it because the candle had a tail? I wouldn't consider that a tail. No, it's just it's getting bigger. Like, again, you got to look at things relatively. Like, you know, we're looking back at a chart. But if you could hide everything past 955, this looks like a major candle here. It's wide ranging. Look how wide ranging this candle is compared to what it does typically. It's on huge volume. Look at how heavy this volume is on this 955 candle compared to the volume that it does typically, right? It just happens to get bigger and bigger and bigger. That's what capitulation looks like. That goes back to somebody else's question when we were reviewing AMD on why you can't just look at a stock and say, oh, the volume's getting really big, so I'm going to come in on the other side of the trade. Because if you did that in Rivian and you were buying at $83 because the volume was getting big and the range was getting big, you were probably out of business by the time the actual low came in, right? Yeah, the tail has nothing to do with anything. It's tiny. Scott, man, I'm driving out. I'm starting my drive out on Martin Luther King weekend, is what it looks like. So my plan right now is to start to drive out on Martin Luther King weekend. That Friday, though, is my father-in-law's 70th birthday, though, so I got to stick around for that. And then I'm probably going to get an Airbnb somewhere for 4 days. Maybe like Kansas City or Omaha, something like that. So if anybody's in that area, give me a shout-out. Maybe we can meet up. Kansas City would be slightly out of the way. Omaha's cool, but I've been there already, so I like seeing new places. So I was thinking maybe I'll go slightly out of the way to stay 4 days in Kansas City. I know nothing about Kansas City. Or maybe also Des Moines is kind of there. The Omaha would be a little bit better. Maybe I could even make it as far as Cheyenne on that first weekend. But then I'm going to work, hopefully from an Airbnb, and trade for the 4 days. And then I'm going to do the next leg of the drive from wherever I am in that area to, Victor, Idaho, Jackson, Wyoming area. I'm a little nervous about the snow on the drive, though, to be honest. I saw that the whole road between Cheyenne and Jackson was closed last week at one point because of one of those snowstorms. I'm hoping I'm able to make it. Honestly, I know Jackson Pass got closed a few times already just because of snow. I'm so freaking jealous that I'm not out there already, man. There's no way I'm ever spending another winter in New York. I'll just kill myself first. I shouldn't say that because I shouldn't say that, period. But I'm going forward after this year. I'm going to try to get out west in like November and stay there through winter. So I'm already there for when the big snows occur. Instead of I look at my Instagram and I see Big Sky and Jackson and Targhee, and I just want to have a good cry that I'm not there. Anyway. Yeah, and the other thing that Rivian did was it broke through the IPO price there, which is what Josh is bringing up. The first and last candle of the day are almost always the highest volume candles of the day because of the market on open and market on close orders that get settled. It settles all the MOC orders all in that one print, the closing print. The closing print gives really big volume to that. Yeah, Mike Strub. Strub? Yeah, I get it. If it was in the process of forming that candle, I'm fine with that. And that goes back to what I was saying. Sometimes you buy that through 133 on the way up or whatever, you're cheating a little bit, and it doesn't work out, and you stick with it. I have had experiences where I've caught capitulation trades and made a lot of money in it, but it was after getting stopped out 3 times. It's the 4th time in which I actually really caught it. From Brent, back to Rivian. On Rivian, in that case, you look at the volume on the 1 minute. I don't look at 1 minutes. And a higher low, and buy the high of the pivot, or the green takes the red off the higher low. I don't look at 1 minute charts. I think the time frame is too small. I don't look at 2 minute charts either. The time frame is too small. It's too easy to get sucked into false information on those small time frames. The minimum I ever look at is a 5 minute chart. Once in a while, if I just need to reference what a movement was, I have access to a 2 minute. I almost never ever look at it. 5 minutes is the smallest time frame I look at. Anything less than that, it's too microscopic. It's too easily manipulated. It's just not giving you the information that you need, I think, to give yourself really good risk rewards. From Sharir, do you change your re-entry size if you get stopped out of your first capitulation buy? Yeah, sometimes. So size always depends on space risk is the first thing I would say. So the real question you should be asking is, do I change my dollar risk on the trade if I get stopped out the first time? And the answer is yes. I actually often get bigger on the next trade because I have more information. And when I have more information, I have more conviction. So it's regular for me that I get even bigger. You just got to be careful with that. You got to be careful that you're not. There's a difference between taking in more information and having a good trade and fighting stock. If you're looking at your P&L that you just got stopped out and saying, oh my God, I just lost 500. Now I need to quadruple my tier size so I can make 5,000. it can be very dangerous. But that's, if you want to know what I do, it's not unusual at all that I'm actually getting heavier. I figure it's not an entry for Rivian when the reversal is confirmed at 82.37 at 10:30. Oh, okay, cool. Cool. Oh, is it an entry? I'm not taking that as an entry, even though it is a reversal. You got to also be looking at your multiple time frames, right? So I don't like that. I don't like this execution into this time zone. I think that this has to do with you already being in it, and you could also then begin to start to trail. Someone asked me about trailing intraday on a position that they were long. You can really only trail when you're with the trend, right? So this candle is important for trailing as well. So once that new high comes in, now you're with the trend, you can raise a stop on some or all of your position to this low, where you can't really do that when you're counter trend still. All right, let's start to wrap it up because I'm getting tired and I got a lot more work I got to get done today before I leave. I just had a busy day, but I'll try to get through the remaining questions on here. From Tommy on YouTube, is possible to counter trend support and resistance area, like for example, if a triple support break can use that pivot for a short entry? If I understand your question correctly, which I think I do, then yeah, you can. If you've got a support level that's held multiple times, maybe even like what we were looking at Lucid, I know it was more than 3 times. You could look to short through the level, for sure. From Brent, what type of setups are you typically making your best money on buying in the first 5 minutes? Breakouts. From Scott, it took some time, but we finally have awesome conditions. But it's been brutally cold. Yeah, I've seen that on the temperature gauges as well. A little bit warmer down south in Idaho where I am. Still with lots of snow though, than where you are. But I've been seeing that I've been paying attention to that. Mike wants me to come to Columbus. I'll be down. I have never been to Columbus. I did an evening in Cincinnati on my way back from Idaho on my last drive, and I really liked it. Really liked Cincinnati. I don't know if I'd want to live there, but really liked it for like a long weekend type of thing. I walked over the bridge into Kentucky to drink some bourbon. Cool experience. And I think the Cincinnati Reds were playing, but they were playing away, so everybody was on the street, and everybody was out in the street, like, loving it. It was pretty cool. Sharir making me jealous. Brent, I understand you don't use the 1 minute. Understandable. If you look at the 1 minute, which I can't even do, you can see the volume already died off and confirm the bottom was the only real reason I ask. So I actually literally don't have a 1 minute chart plugged in or programmed in to my software. I can't look at a 1 minute even if I wanted to. I do have a 2 minute programmed in, which I tend to not look at. But the 2 minutes giving you the same confirmation here, right? Volume maximizes on the hammer candlestick with the tail here. So that would have been very tradable in this situation. Mamcap, I placed a bid around 75.40 on Rivian on its bounce off lows, yet it never filled. Yeah, sometimes you gotta just take the offer. I try to come inside bid when I can, but sometimes you just gotta take the offer. All right, gang, I'm gonna wrap it up. Tired. Cool trading session today. Lots of stuff to learn for everybody. Good money to be made. See everybody tomorrow.